Hey guys, what's going on? I'm just going to take a quick look here at Vechain, ticker for this is VET, and I'm currently on the weekly time frame. Now, if you've been following my Vechain analysis videos for a while, this chart that I'm looking at right now might look a little bit different, and oftentimes what I'll do, I like to look at two different charts. So I'll mark up one chart and then I'll look at another chart and just see if I can find anything else that looks significant. Now on this particular chart, there's a few levels that I have marked that I do not have marked on the other chart. The first being this upsloping level of support. So you see it was resistance here, here, and here. When we broke out of it, we came back to retest it and it held as support, and bouncing off this triggered this huge run to the upside. And then on the retracement after this long-term bear market, this trend line held as support once again, actually not once, but twice. Okay, another important level that I have marked on this chart that I do not have on the other chart would be this downsloping level of resistance, but this time it's drawn from the wicks. Okay, and if I change this over to the other one, you'll see I have it drawn from the candle bodies. Now, if you look at this trend line that I have drawn from the candle bodies, you'll see that we are in the process of breaking out of it. Now, this candle has not closed yet. This is a weekly candle and it closes tomorrow evening at around 8 p.m. Eastern time. So what you want to see then is you want to see a candle body closing above here. If we get a huge dump tomorrow and this ends up as just a wick and the candle body closes below this resistance line, that'll be pretty bearish. But as of right now, things look pretty good. Okay, so on this chart, currently breaking out, but again, I'll flip it back over here. On this chart, the price is still under this trend line that's drawn from the wicks. Okay, and you'll also see that I have this horizontal line drawn on this chart and not the other one. I highly recommend that you draw this on your chart. Just take a horizontal trend line tool and paste it right at the low of these candle bodies right here. So you see it was support right here. When the price came back to it, it was support once again. And look at this wick. This is where the buyer stepped in. So a lot of big players are looking at this particular level and the price is not far off of it. Okay, so this level, I have it around 0.03865. And then you'll see that I have this box drawn here. This is kind of a range. So the top line of this box is about 0.04206. And you'll see that also kind of lines up with the downsloping level of resistance drawn from the wicks. Okay, so if it takes us a few weeks to get up here, we're going to have a lot of confluence at this particular level. And again, that's slightly over 4 cents. And what I'm basing the top of this range on, the top of this red box, is the Fibonacci resistance level. Okay, so I'll take a Fibonacci retracement tool and I'll run it from the swing high all the way down to the swing low and drag it across. And then you'll see here at the top of this range is the 382 retracement level. So yeah, just a lot of confluence coming in right here. Now with trading, it's quite tricky because you have so many market participants that are looking at so many different indicators. So this is why sometimes I just do two charts and I try to analyze and try to figure out what other traders are likely to be looking at. So in this chart, we have a break when I run this trend line from the candle bodies, and then some traders I know are going to be looking at the wicks. So I like to factor all this into my analysis. Some people will draw the Fibonacci retracements differently as well. I'm on log scale and I have my fib settings based on log scale because I primarily trade the higher time frames and I personally feel that it works best. But some people might not be looking at the log scale, and then their Fibonacci, their 382, is going to be all the way up here at 11 cents. Right, so as the price comes up here, I'll have to factor this level in as well. But honestly, the fibs that I have based on the logarithmic line up much more accurately with the price action. Okay, so for example, this 50% retracement level, look where that lines up, right at the top of these candle bodies right here. The next level up, the 618, that's the top of this wick and pretty much the low of these candle bodies right here. Now, of course, if I change my chart, I have the Fibonacci marked differently, and over here you'll see that I have it as a range between the 618 and the 65. So I just actually haven't plugged in the settings on the other chart, but this is a range that lines up absolutely perfectly with the price action, where we have the 618 right at the top of this wick, and we have the 65%, so the top line of what's considered the golden pocket range, right at the top of these candle bodies. So this is why I try to look for confluence between the Fibonacci retracement levels and the price. So when I looked at it before with the logarithmic off and we had that random 382 retracement level kind of in the middle of nowhere, I'm not going to give that level that much emphasis. I'm looking for confluence. Okay, now looking at this chart, the one I analyzed in the last video, you see that we had this falling wedge breakout. And now we have created a descending channel where we have multiple touches on this resistance level, multiple touches on this support level. And this is where we are currently breaking out of. Now, in order to estimate the target for a descending channel, what you would do is measure the width of the channel and then project it from the breakout point. Now in this chart, just left over from last week, I have this breakout target already on, and that's due to me measuring the width of this channel and then projecting it, and you'll see that that brings us pretty much exactly to this 786 retracement level. Okay, so that's going to be the breakout of this descending channel. And of course, no guarantee it gets there. None of this is financial advice. And we do have a lot of strong resistance levels ahead. But that is the measured move breakout target for this descending channel. Okay, and that is slightly over 14 cents. Now, as I mentioned, this golden pocket range that lines up perfectly with the price action is going to be a tough level to crack. And right now, reverting back to this chart, this is the local resistance level, okay? If we're going to base it on the price action, it's going to be 0.03877. And if we're going to go up to the top of that range at the 382 retracement level, aligning with this downsloping level of resistance based on the wicks, that's going to be slightly over 4 cents. It's 0.04257. Okay, now that we're getting to the end of the month, we only have about a week left. I'm going to change the chart back over, and you'll notice that I have these green horizontal lines marked on this particular chart, and these are monthly levels. So you see here on the weekly, the price kind of cuts right through it. Same thing to the downside. These are not weekly levels, but if I go to the monthly time frame, you'll see that this range, actually I'll get rid of the fib for now. Look at the top green line here and how accurately it marks the highs based on the candle body close. Okay, so right here for 2 consecutive months, this is the key level that the market participants were watching. And this second month here, we sold well above it, but by the time this monthly candle closed, we got a huge dump, and the candle body closed back below this level of resistance on the monthly time frame. When that happened, we came to the bottom of the range, and for 2 more months, this lower range held as support. Look at these candle bodies right here. When we held as support, we came back up to the top of the range. Same story, we traded well above it, but by the time this monthly candle closed, a lot of selling pressure came in, and for the consecutive 2 months, these candle bodies closed back below. After that, we came back to the bottom of the range. So you see where we currently are in this massive bullish candle here, we are well above this monthly level, which is just under 3 cents. So unless we get a huge dump, it looks like we're finally going to break out of this channel to the upside. Okay, so just keep an eye on this next week. Look for the monthly close. And if you see a candle body closing above this green line, basically the top of these candle bodies right here, that's a very, very bullish indicator. All right, I'm going to change it back to the weekly time frame. And as you can see right here, the candle body is well above this downsloping level of resistance based on the candle bodies. So now this former level of resistance is likely going to serve as a support. So I'm going to take this down to the daily time frame. And when I do that, you're going to see that this level was a resistance for quite a while, right? We came all the way up to it and we had a big sell-off all the way back down. So we went from 0.03166 all the way back down to 0.02 whatever 637, but this was a move of about 18% to the downside, the rejection off of this. So this is a very significant level. So if you start seeing the price dumping back down, what you want to see is this downsloping level of resistance. You want to see this flip to a support, and you want to see a successful bounce off of this line, okay? And that's also going to coincide with the previous high rate here. So keep that in mind. If the price does come down and come down to retest this level, this previous high, and basically this downsloping trend line, that'll likely present a very good entry. Okay, so this is going to be the local level of support. And obviously, as I just mentioned, this up here is going to be the local level of resistance, okay? Again, that range is between 0.03887 and all the way up here to 0.04274 roughly, okay? So just draw these levels on your chart. All right, guys, that's it for Vechain. Things are looking pretty good. Couple things, if you're not subscribed and you want to get notified when I release new videos, click subscribe, click the bell, then click on all. Now that the market's heating up, you really want to make sure that you have that notification bell on, because when I see a particular trade setup that looks interesting, if something's breaking out or breaking down, we're going to try to get a video out. And if you have your notifications on, you're going to be one of the first people to see it. Also, if you wanted a place to trade Vechain and pretty much any of the other coins I talk about on this channel, I put the link to 3 different exchanges in both the pinned comment and the description. And through those links, you guys are going to get sign-up bonuses. Now, of those exchanges, 2 of them are going to require you to go through a KYC process and submit your documents if you want to trade and withdraw. If you don't want to do that, but you still want a centralized exchange to use, just for how smooth it is and the fact that you can use leverage and whatnot, not that I recommend that, then the one that you would likely want to try is linked at the top. That one's called BingX. But as of right now, I think they're one of the only centralized exchanges that does not require you to submit your personal information. Also, you may need a VPN, just depending on where you're located. And if you're in crypto, it's probably a good idea to have a VPN anyway. So I put a link to a promotion on a VPN, again, in the pinned comment and description. All right, guys, that about wraps it up. Hopefully you found it helpful. Take care. Have a good day. Bye.